Hello everyone. Welcome to my channel. In this video, I'm going to discuss Cointelegraph's article by Marcel Pechman about Bitcoin's 20K support line. I hope you enjoy it. If you find it interesting, please don't forget to like and subscribe. As the Bitcoin price continues to struggle around the $21,000 level, new data reveals the strategies of professional traders. Bitcoin's price has been over $20,000 for the previous 9 days, but traders are becoming increasingly skeptical that this support will last if traditional market fundamentals deteriorate. The Bank of England hiked interest rates by 75 basis points, to 3%, on November 3. This was the greatest single increase in rates since 1989. As the Monetary Policy Committee battled to rein in inflation, the possibilities of a protracted economic downturn also rose. The UK's central bank has warned that the economy faces a very tough outlook, based on its most current growth and inflation estimates. In addition, increased energy prices and tighter monetary policies weigh on consumption, according to the committee's declaration, which puts downward pressure on employment numbers. On November 2, the Fed raised interest rates for the fourth time in as many months, bringing them to their highest possible level since Jan of 2008. Bitcoin's failure to breach the $21,000 resistance on October 29 and subsequent decrease of 4.5% can be partly explained by the confirmations of a conservative approach from central banks. Let's check out some derivatives metrics to learn where the pros are in the present market. When market participants and arbitrage offices are raising prices for upward or downfalls coverage, a 25% delta skew is a clear indication. It is common for the skew signal to go above 10% in bear markets as options traders increase the odds of a price drop. In contrast, positive markets typically push the skew signal below -10%, indicating that the value of bearish put options is being devalued. Before October 26, the delta skew was above the 10% level, indicating that options traders became less likely to offer downside risk. Things began to look more even, but the October 29 test of $21,000 in resistance did not inspire optimism among option traders. The delta skew over the next 60 days is 6%, indicating that both whales and market participants are valuing in almost equal chances of price increases and decreases. In contrast, other data shows dwindling optimism as BTC nears the $20,000 support. If an event just affected the options markets, it won't be counted in the long-to-short ratio. Position data from exchange clients on spot, perpetual, and quarterly futures contracts is also collected to provide more insight into the trading strategies of institutional investors. Due to occasional differences in methodology between markets, it is recommended that readers focus on trends rather than raw data. Despite Bitcoin's 9% gain between October 22 and October 29, professional traders trimmed their leverage long holdings marginally, as measured by the long-to-short indication. For example, Binance traders saw their ratio rise from 1.25 at the beginning of the period to 1.22 at the end. At the same time, Huobi's long-to-short ratio showed a little decline, falling from 1.03 to 1.00 in the week leading up to October 29. The measure at OKX, a cryptocurrency exchange, dropped from 1.01 on October 22 to 0.94 on October 29. What this suggests is that, on average, investors lacked the confidence to increase their exposure to optimistic trades by using leverage. Options skew and long-to-short ratio imply that leverage buyers were only somewhat confident in Bitcoin's future value after its price fell 4.5% from its October 29 high of $21,000. If investors were feeling more upbeat, the 60-day delta skew would have moved into the negative territory and the long-to-short ratio may have risen. The current reading from the derivatives market indicates a weak $20,000 support, though it is crucial to recall that even professional traders sometimes misinterpret the market. Nothing suggests that professional traders anticipate a decline, therefore that's a positive sign. Given that it has been 50 days since BTC moved over $22,000, practically hardly anything happens even if the price returns to the $19,000 region. Thank you for watching. Please don't forget to like and subscribe to not miss my future videos. Let me know what you think about Bitcoin price action in November. Do you think the price will go up or down?